Good morning, Paul Georgi from Allendale. It's June 29th, 2010, the day before the big USDA planted acreage report that we're all waiting for. This morning we're going to see pretty much commodities across the board lower, and a lot of that's coming off of the euro currency dollar relationship. We got the dollar up sharply here this morning, up 37. It's causing pressure in the crude oil. That's down over $2 as we speak, and the stock market's expected to open anywhere from 90 to 100 lower. Biggest problem in the euro is the pan rattling that's going on again between some of the countries, and the stability of Spain and Greece and their ability to repay debt is got people concerned again, or focused again on the euro currency and its possible weakness, and that's having its impact across the board here this morning. In the corn market, expecting that to open 2 to 3 lower here at 9:30. Some of the focus there, the crop conditions report yesterday afternoon came out 73% good to excellent. That's down 2% from last week. Silking at 7% versus 4% a year ago. And the adjustment of trade, the position evening here ahead of that planted acreage report tomorrow morning, quarterly stocks report, end of a quarter also, and we've got first notice day tomorrow on July contracts. So if you got any July long positions in the July contracts, make sure you move out of those positions by the close today, or you will have the risk of delivery against those contracts. The Dees corn toying with contract lows, which were made on February 7th, 2007 at 346. So some major support points looks like we're going to be testing here today. The soybean market called 2 to 4 lower. Crop conditions there yesterday, 67%. That was down 2% from last week. Beans blooming at 9% versus 4% last year. The crop conditions still are excellent. The weather conditions over the next 10 days appear to be ideal for crop performance, crop growth, as it looks like we're going to dry out here in the Midwest for a few days, then a chance of showers again. So doesn't look like we can get any better weather there. The soybean markets technically have been consolidating in the last several days between 925 on the high side and 908 on the support side of the market. We expect it to trade within that range here again today ahead of this USDA report tomorrow. Check out our website for the full details of the report, trade averages, and Allendale's estimate. So, or just call us at 800-262-7538. We'd be happy to discuss those numbers with you. Wheat market expected to be 5 to 6 lower here this morning, kind of following the other commodities at this point in time. However, crop conditions there look very good, 84% good to excellent on the spring wheat, with winter wheat 38% versus 17% harvested a week ago, 39% average. The support and resistance in the wheat in the September contract, we got resistance at 469.5, and then again at 485, with support at 454 and then at 442.5. In the cattle trade, we had positive action yesterday. Started out weaker, ended higher. Technical formation there looks very positive. However, we probably are going to be lower here this morning. Overnight electronic trade is down anywhere from 30 to 40 cents. The news in the cattle, beef appears to have bottomed here. We're 60 cents higher yesterday, with in the choice select up 16. However, you got to remember that we're seeing some fill-in buying here ahead of the July 4th holiday, so that could disappear as we get closer to the end of this week. Support 88.90 in the August cattle, then again at 88.20. Resistance at $90, and then again at 90.75. In the hogs, that market surprised everybody yesterday, falling apart after a USDA hogs and pigs report that actually was very neutral, with a tinge of friendliness to them, because we are down 3% in the breeding herd and in most categories. Certainly was a surprise to see that market sell off. A lot of that selling pressure came from outside markets, as we see, or outside influences such as the funds. When the dollar started to sell off, funds came in and sold. That hit stops, broke trend lines, and broke moving averages. We went down, tested the 100-day moving average yesterday in the August hogs, closed just slightly above it, but this morning we are trading well below that number, 50 to 60 lower right now in the nearby hog contracts. And technical support there, 81.20 in the August, 80.80 below that, with resistance around 82.25 and then at $83 in the August contract. The cutout values there were slightly lower yesterday. No major changes. Some fill-in buying is providing some support, but our meat traders are saying the meat is heavy. There's too much supply around here for the short term. So if you got any questions, give us a call, 800-262-7538. We'd be happy to answer any questions you might have. We wish you a successful trading day. We'll talk to you tomorrow morning. Thank you.